Swayam Prabha. Digital India. Educated India.
Hi all, welcome to this session on commodity derivatives and risk management, and today we are going to discuss more on carbon derivatives. And carbon derivatives do not trade in Indian exchange. However, there is considerable amount of trading happens in other international exchanges. So I thought of discussing what is the carbon credit and what are carbon derivatives, and how pricing and valuation of these carbon derivatives are done. Now, all of us, we know that emission of greenhouse gases is the prime contributor to global warming. And there are a lot of discussion and debate is going on what needs to be done so that our greenhouse gas emission is reduced, because this emission of greenhouse gases is leading to very extreme weather conditions what we are experiencing of late. Now, before we go into our understanding of what exactly greenhouse gases and the different aspect of carbon credit, as per the United Nations framework on greenhouse gas emissions, the greenhouse gases are categorized as carbon dioxide, methane, nitrous oxide and chlorofluorocarbons are major greenhouse gases. And the total emission of greenhouse gases all over the world is increasing at a very, very high rate. And this particular picture shows the total carbon dioxide emission, kilotons of carbon dioxide gas emission from the year 1960 to 2008. And I have downloaded this data from this. If you can see, this data has come from the World Bank website. So this, it is clearly visible to you. If you see this one, in 1970, total greenhouse gas emission in kiloton of carbon dioxide equivalent was standing at 27.074 million, and by 2010 it has gone up, 2012 it has gone up to 52.762 million. And if you can see, it is absolutely growing at a very high rate. Of course, in the year 2008-9 it went down a little little lesser, but subsequently it is going up at a at a relatively good rate. Now, the need for controlling the this greenhouse gas emission was felt long back, and the first convention, that is United Nations Framework Convention on Climate Change, or UNFCCC, came into existence in the year 1992, and it had a member nations of 194 countries. And these countries understood the importance of reduction of greenhouse gas emission and the negative impact of greenhouse gas emission on the global climate and weather conditions. And they in 1990 to treaty they made certain decisions to reduce the greenhouse gas emission. However, this treaty was not made mandatory among the member nations because of certain certain conditions. So this UNFCCC required certain conditions to be made before this the treaty outcomes were, or treaty policies were made mandatory. Kyoto Protocol was Kyoto meeting, United Nations Framework Convention on Climate Change meeting at Kyoto was held on 11th December 1997, and on this date this member nation decided that this particular Kyoto Protocol rules and regulations is going to be becoming a binding agreement, and this agreement came into existence from 16th February 2005. So what is the important or salient point with respect to this Kyoto Protocol? The Kyoto Protocol recognized that the majority of greenhouse gas emission is contributed by the industrialized nations, and they are primarily responsible for the greenhouse gas emission. And this protocol paved for a heavier burden on developed nations under the common but differentiated responsibilities. So what is this meaning of common but differentiated responsibilities? This Kyoto Protocol indicated that it is the responsibility of all member nations to work towards reduction of greenhouse gas emission. However, a major share of this responsibility will be taken by the industrial nation. And during this Kyoto meeting, this UNFCCC also identified which are the activities, industrial activities, which are contributing to the greenhouse gas emission, and which are the greenhouse gases, which gases will be treated as a greenhouse gas. So this, I hope it is visible to all of you. So this is the, please see this one, the list of greenhouse gas and list of sectors generating this greenhouse gas as identified by the Kyoto Protocol. So this is your carbon dioxide, methane, nitrous oxide, hydrofluorocarbons, and sulfur hexafluorochloride. All these are your GHG gases, and which are the sectors which are responsible for generating these GHGs. So you have fuel combustion industry, energy industry, transportation, your industrial process, mineral process, chemical industry, metal production, and you have solid waste disposal, waste water handling, waste incineration, and all these industries are responsible for generating greenhouse gas. So this particular detail got formulated during the Kyoto Protocol. And during 2005, when this Kyoto Protocol became a binding agreement, this member nation agreed on the emission reduction commitment based on the 1990 emission level during 2008 to 2012. So let me rephrase. In 2005, this Kyoto Protocol agreement became a binding requirement, and as part of this binding requirement, all member nations agreed to reduce their GHG emission, but reduce GHG emission based on which year data, that is based on 1990 emission level, and the reduction is going to happen during 5 years, that is from 2008 to 2012. Let's take an example to understand this. So this emission reduction targets were expressed as a percentage of the base year GHG emission level. So let's say if a economy or if a country was a country's GHG emission was X tons in the year 1990, and the country agreed to reduce this GHG emission by let's say 82%. The country agreed to reduce the GHG emission by 8%. So, and this reduction is going to happen, let's say, within 5 years, that is from 2008 to 2012. So, this emission reduction targets were expressed as a percentage to the base year 1990s GHG emission level, and this emission reduction percentage also set the allowable level of emission for a given country. That means how much GHG a country is allowed to emit, because a emission of GHG cannot be fully stopped. As long as the industrial activities is going to go on, and our needs for air conditioners, our quality of life is is increasing, and we are requiring more goods and services. So, as long as human beings are going to live in this earth, greenhouse gas emission is going to be there. So, it cannot be completely done away with it. However, greenhouse gas emission can be reduced, and so this protocol allowed for the maximum amount of GHG which a country can emit, and this limit is, or this limit was expressed in terms of assigned amount units, or called AAUs. So, what is an AAU? AAU is defined as an allowance to emit 1 ton of carbon dioxide equivalent. So, AAUs is a allowance to emit 1 ton of carbon dioxide equivalent. Now, let me read out what is the Article 3 of the Kyoto Protocol, which spells out the procedure for emission reduction. Please, if you see this, it mentions that the parties which are or the countries which are included in Annex 1 shall individually and jointly ensure that their aggregate anthropogenic carbon dioxide equivalent emission of greenhouse gases listed in Annex A do not exceed their assigned amounts, calculate pursuant to the qualified emission limitation, and pursuant to their quantified emission limitation and reduction commitment, with a view to reducing their overall emission of such gases by at least 5% below 1990 level in the commitment period 2008 to 2012. So, all member nations agreed to reduce their GHG gas emission with respect to the 1990 level. Now, let us take an so this particular table, if you see, this particular table indicates what is the allowable limit for different countries. Let us say Australia is allowed to emit 108% of the 1990 level, 108% of the 1990 level. So, if Australia was emitting 100 units of carbon dioxide equivalent in the year 1990, by 2002 it is allowed to only emit 108 units. It is not allowed to emit more than 108 units. Similarly, you have Austria, which is allowed to emit only 92% of the 1990 level. Now, some of you may ask this question, why a country would be allowed to emit more than the other country? Maybe the nature of business, nature of industry is such that this industry are in general emit more greenhouse gases. So, if the protocol becomes too stringent, maybe economy will not be, or countries will not be interested to be part of this agreement. So depending upon the past history of the economy and the business venture which is there in a particular country, different countries were allowed to emit different amounts of greenhouse gases. Similarly, you have UK was allowed to emit 92% of the 1990 level. Now let's take this example. Now let's calculate what is going to be the assigned amount for Australia. So level of emission in the base year in the 1990 for Australia is around 418,372, as you can see. So in 1990 the number of or units of AUs which were emitted by the Australian all industries together in Australia was standing at 418,372. This will be multiplied by 108% and into 5 years, so that is coming to your 2.259 million units of CO2 equivalent. So the the Australia as a whole, or all industry in the Australia as a whole, are permitted to emit only this much of carbon dioxide equivalent within these 5 years, from that is 2008 to 2012, and this assigned amount or allowances formed a cap, that is known as your emission cap. That means Australia is not allowed to emit any more greenhouse gas than this particular limit. Now if industries belonging to Australia or companies belonging to Australia emit greenhouse gases which is higher than this label, then they have to buy this amount, this excess greenhouse whatever they are emitting, that many units they have to buy from some other nation. So that as you can see, if the actual emission in units is less than the assigned amount, the surplus can be traded with the deficit nation. So for each nation, total amount of emission which a nation or country can emit, that was given. So the upper cap is given, and if a country emits more GHG, it has to buy from other countries which have a surplus GHG. That means they have emitted less amount of GHG as compared to the maximum amount permissible for that country. So this particular program was known as cap and trade. So there is a cap for the total amount of greenhouse gas which can be emitted by a country. If the country crosses that cap, it has to buy that one from other countries. Besides this cap and trade initiative or mechanism, Kyoto Protocol also initiated two other mechanisms. Those are known as your clean development mechanism and joint implementation. Let me repeat. Besides the cap and trade program, Kyoto Protocol also identified two other initiatives, that is clean development mechanism and joint implementation, so that the member nations reduce their greenhouse gas emission. So what is exactly a clean development mechanism? A clean development mechanism, in a clean development mechanism, a member nation can start a project in a developing country and can earn certified emission reduction units, that is CERs. It can earn CERs by starting a project in a developing nation. So what kind of a project it will be starting? Let's say a Annex 1 country will be, let's say it starts a rural electrification program in some country. rural electrification program in some country based on the solar panel. So that Annex 1 country, by undertaking this particular project, will be able to earn some certified emission reduction units or CER units, and these CER units can be can be traded in the exchanges, commodity exchanges, for generating some cash flow for that for the companies which are owning these CERs. So what is this CERs? One CER is equivalent to 1 ton of carbon dioxide emitted, carbon dioxide equivalent. And these CERs generated can be used to offset their own GHG emission. So in the actual activity, if they have, let's say, if a particular country, all industries from the particular country have emitted more greenhouse than whatever has been permitted by the cap and trade program, so these companies can initiate these companies can initiate clean development mechanism related projects in other developing nations and can earn certified emission reduction units. And who is going to check whether the projects are as per the clean development mechanism rules and regulation? So the UNFCCC has appointed certain designated operational entities which check whether these projects abide by the CDM mechanism or not. And if the projects are fine and they are as per the CDM guideline, the UNFCCC issues certified emission units to the project owners. Now the first CERs were issued in the year 2005. So please quickly I want you to please go through this particular paragraph which is in front of you. Please see that the first CERs issued under Kyoto Protocol on 20th October 2005. The executive body board of the CDM issued CERs to 2 hydroelectricity projects which were undertaken at Honduras, and it was undertaken at 2 hydroelectric projects which was undertaken at Honduras, and the first project was in partnership with Italy, and the second project was with Finland, and both projects generated about 37,000 and 17,800 CERs for the project owners. And who was the designated operational entity? That is the DNV Certification of London. There is a company called DNV Certification of the London. Now subsequently many projects which have been undertaken as part of the clean development mechanism, and some of the recent recent CERs which have been issued by UNFCCC, if you can see, it is as late as 29th July. So Salkit wind farm, it was how many units of CERs has issued? It is 72,940 CERs been issued, and in which country it was undertaken? It is Mongolia, and which is the other party? This is Sweden. So this information again I have downloaded from United Nations UNFCCC website. So other different projects are there. If you are interested, you can download this information, and which indicates how many CERs is being issued on a daily basis. Even in fact, if you see on 29 January 2016, you have 4 projects which have been verified, which have CERs are issued for these 4 projects. Now let's go to the third mechanism, that is your joint implementation program. As part of the joint implementation program, the member nations which are Annex 1 countries, they can start some project with another Annex 1 country, and through this kind of a project they will be earning ERUs, that is emission reduction units. And this joint implementation supervisory committee will verify whether these projects abide by the joint implementation guideline or not, and if the projects are abiding by joint implementation guideline, they will be issued emission reduction units. So just to summarize, you have based on the GHG emission, based on the cap and trade program, countries will be allowed to have AAUs, that is assigned amount units, AAUs, as part of your clean development mechanism. They will be issued CER, certified emission reduction units, and as part of the joint implementation they will be issued emission reduction units. So these are basically in fact all these three are same, but the way these are generated, these carbon credits are generated, is different. So to differentiate the process of generation, these have been named differently. And they also, when these are traded in the exchange also, they are traded by these names, and the price of these these carbon credits at times vary from each other depending upon the supply and demand. We will come to this aspect little later. Now how these carbon credits are recorded. So there is a each country has to maintain a national registry. Let's say a company in India undertakes certain initiative by which it is reducing the greenhouse gas emission, and for which it would be earning certain carbon credits. So that in that registry, national registry, that information will be recorded. That information will be recorded, and you have all these national registries are connected to the international transaction log, and this international transaction log is maintained by UNFCCC Secretariat. Similarly, like your UNFCCC, to bolster the activity of UNFCCC, you have European Union of Emission Trading, which started a trading system called European Union Emission Trading System. Let me repeat, European Union Climate Change Program started a trading system called EU ETS, that is European Union Emission Trading System, to promote the Kyoto Protocol. It is not a parallel initiative, it is just to promote the Kyoto Protocol initiative. A new trading system was formulated, which was named as EU ETS. And what was the objective of EU ETS? EU ETS was started in 2005 to facilitate trading of carbon credits among individual operators and countries within the European Union. So even if a country has a surplus or deficit carbon credit, so there should be a easy way of buying or selling these carbon credits. So this particular trading system aimed at facilitating the trading of carbon credits among the European nations. So exactly when these in the trading system, the AAUs are known as EUAs, and CERs, the same CERs which were generated as part of the clean development mechanism, and emission reduction units as part of the joint implementation. So with this, we will be winding up this session, and we will be continuing with the remaining part of the carbon credit derivative trading in the subsequent session. Thank you, all of you.